Hi everyone, welcome back. Today I want to dive into one of the most critical aspects of crypto investing, exiting the market with a strategy. Trust me on this, profit taking is the most important stage of your investment journey. Without a clear exit strategy, you can watch your hard-earned gains disappear. This is a must-watch video. This video is specially focused on an altcoin exit strategy, how to navigate the market cycle with altcoins using Bitcoin as a key indicator. If you skip profit taking, you might end up waiting until the next cycle, potentially in 2028, to see this opportunity again. I hope you'll get value from this, so please smash that like button and subscribe if you haven't done so. And remember, this video is for educational content only, not financial advice. Now let's get into the serious part. Why so many lose money in crypto? Most investors think they will exit at the perfect time, but the reality is different. In every bull run, many people ride the hype and hold too long, losing everything when the market crashes. The crypto market operates differently from traditional stock markets, mainly due to liquidity. While Bitcoin has high liquidity, many altcoins do not, meaning price can drop quickly even with moderate sell-off. This is why early sellers typically secure the best profits in a bull market, while those who hold too long often see their gains fade away. Crypto is driven by emotion, hype, and speculative interests. By understanding these dynamics, you can create a well-timed exit strategy to lock in your profit. Remember, don't get lost in the excitement. Focus on securing your gains. It's very important. When we enter the phase where retail investors will flood into crypto thinking they're catching a once-in-a-lifetime wave, many who jumped in early, like those who bought during the bear market, are already up significantly. But here's the harsh reality. A majority of these investors will ultimately exit with losses if they don't play their card right. Without a plan, even massive gains can vanish in downturn. Timing is crucial, but aiming for the perfect top isn't the goal. Our goal is to exit with substantial secured profit. And how do we do that? First, by understanding the bull run cycle. Understanding the bull run cycle is essential to knowing when to consider your exit strategy. Bull runs typically follows a pattern, and recognizing this phase can help you time your profit taking. In general, a bull market goes through multiple stages. Bitcoin pumps first, then large cap altcoins follow, and finally mid to low cap coins have their explosive moments. The cycle often peaks with massive gains across the board. When Bitcoin reaches speculative levels, say 90k to 100k or even higher, market sentiment typically shifts to extreme greed. This is usually when Bitcoin investors begin considering profit taking. However, since this video is focused on altcoin profit taking strategies, Bitcoin can act as our North Star, signaling the approach of Bitcoin season. Once Bitcoin dominance starts to decline, that's when altcoins tend to surge, making the beginning of altcoin season. This shift occurs because Bitcoin investors, after making substantial profit, often invest a portion of their gains into altcoins, aiming for even higher returns. This influx of capital into altcoin fuels a surge into the price, creating an ideal environment for maximizing altcoin profit. And to help pinpoint this cycle, we have three key tools. Fear and Greed Index. This indicator reflects the overall sentiment in the crypto market, ranging from extreme fear to extreme greed. A higher greed score often aligns with bullish conditions, where prices are climbing and investors are feeling optimistic. During extreme greed, it's a sign that we might be in the late stage of a bull run, suggesting it could be time to plan exit strategy, particularly for altcoin. Second, Bitcoin dominance. Bitcoin dominance measures Bitcoin's share of the total crypto market capitalization. At the start of the bull market, Bitcoin dominance tends to rise as investors initially flock to Bitcoin. When Bitcoin dominance starts to decline, it typically signals the start of an altcoin season, as capital flows from Bitcoin into other altcoins. This tool is crucial for understanding when it might be time to shift focus from Bitcoin to altcoin. 3 is Total 3 indicator. The Total 3 primary indicator exclude Bitcoin and Ethereum to provide a clear picture of altcoin market performance. When the total 3 value raises sharply, it's a strong indicator that altcoins are rallying independently of Bitcoin and Ethereum. Monitoring this can help us understand the strength of altcoin season and determine the best point to take profit on altcoin positions. Alongside these primary indicators, there are additional signs that retail investors are entering the market, which often signals the late stage of a bull run. For instance, a significant rise in viewership on crypto-related YouTube channels and other platforms often reflects growing retail interest and enthusiasm. Higher search volume on Google for terms like buy Bitcoin, altcoin season, or specific crypto assets also indicate increased retail activity, showing that more people are getting curious and jumping in. Another clear signal comes when crypto wallets app like Coinbase or Binance start trending at the top downloads in the Apple App Store or Google Play Store. This strong uptakes in the crypto apps download is a sign that new investors are actively entering the market. Together, these tools are indicators providing valuable insights into market sentiment. By monitoring these matrices, we can better prepare for altcoin season and establish an exit strategy that maximize gains without attempting to tame the absolute top. Now, the most important part of this video, what strategy should you use? Well, let's talk about what we call the ladder exit strategy. It's a way to secure gains over time. Instead of selling everything at once, cash out in increments. For example, as Bitcoin hits new highs, for instance 90k to 150k, you can sell a portion. This lets you capture profit progressively while still holding some assets if the markets continue upward. For altcoin, use the same ladder approach, taking profits in increments as they hit the key level. For instance, take out 25% or 10% at each key level while leaving a small amount around 10% in case the coin goes parabolic. Now, one of the most crucial parts of this exit is to set financial goals. Decide ahead of the time what amount will secure your financial future, whether it's 100k, 500k or even 1 million. Once your profit hits that target, start taking serious profit. You don't need to aim for exact stop to achieve life-changing gains. Once you reach your goal, stick to it. It's easy to get greedy, but more gains don't mean much if you lose them in crash. Taking profit in crypto is only half the journey. Many people lose the gains by reinvesting them too quickly into high-risk assets. So here's what I suggest. Allocate a portion of your profits to stable, low-risk investment like index funds or bonds or stocks. But remember, you have to wait for bear market. The goal here is long-term wealth security, not consistent gambling. If you're new in financial management, consider speaking with a financial advisor if you don't have a plan. That will protect your money far better than attempting to replicate higher returns in volatile markets. And now let's address some common mistakes that often lead investors to lose everything. First, avoid chasing the next big pump after a bull run. Consider keeping a small portion, perhaps 10% of your gains, to reinvest if needed, but don't go all in. That 10% can keep you in the game while safeguarding the bulk of your wealth. Second, avoid overconfidence from bull market success. The bull market can be incredibly forgiving during bull runs, but it can reclaim everything when it turns bearish. In summary, the goal here isn't to leave at the exact top, but to exit with solid profit. Don't be afraid of leaving gains on the table. Focus on reaching the next financial level, whether that means paying off debts, achieving financial freedom, or creating a safety net. Once you get this, don't risk it all over again. So follow these steps, set your financial goals, use the ladder exit strategy, take profit during peak phases, and secure your gains in stable investments. That's the way you ensure you're actually keeping what you've made. Remember, a solid exit strategy is just as important as a good entry strategy. Thanks for watching, and I'll see you in the next one.